So here's where I started in the whole thing. Closing 15 days or less. We have a lot of transactions that close in that time frame. And the point that I bring up is why, how do they do this? How are people able to enjoy and have such like the ease and facility in our industry with very little stress and anxiety? Their clients are elated, happy, and referrals are coming, just in buckets. And that's ultimately what we're going to talk about today is if we can get the overwhelming majority of transactions to funnel into this particular scope and bucket, better for us across the board. So back to sharing my screen. All right, you guys see my screen?
Yes.
Excellent. Okay, so what I was starting in here, and I apologize for this, but this entire listening aspect of it, and my intro and kind of joke is that old adage, God bless us with 2 ears and 1 mouth for a reason, to listen twice as much as we speak, and whatever the customer is looking to accomplish is ultimately what our goal is. So to put my own 2 cents in or suggest, hey, maybe you should do this and not that, at the end of the day, I'm not making that payment. I'm not living in that house. I'm not making that investment. And whatever it is that they want to do, within the limits of our industry, I'm all about bending over backwards to accommodate anybody for anything. And if we can't get exactly what they want, they got to know why. They have to have an understanding. I talk to people all the time. Oh, I got declined by another company. Why did you get declined? I don't know. They couldn't get the loan for you? No. Got on Sunday afternoon, spoke to a client of Kamel's, and they went in. He's taking a listing in Chino Hills. They want to buy a brand new home in Ontario. They went into the builder in Ontario, and they mentioned the builder that we'd like to sell this other house and use the proceeds in order to purchase this brand new build. And they immediately shuffled him out of that office and said, we do not accept contingencies. So sorry, so sad, bye-bye. He asked, hey, can you just, spend a couple minutes on the telephone with them and talk to him, see if there's any options. And when I called him back Sunday, it was probably just before dinner time. Blown away. These people had you guys need to mute yourself. They had $1.3 million liquid. They could afford both house payments. There was no reason for them not to be able to get under contract if they wanted to buy that home. Like none at all. And even in talking to him, he was just like, are you kidding me? Like, no. So, points in time, there are people in our industry that are action oriented, that are looking for resolution. And there are other people that just build roadblocks. Can't do this, can't do that. So at the end of the day, if they can't get something they're seeking, I got to be able to explain it so a 2-year-old can understand it. Anybody in lending has to explain it so a 2-year-old can understand it. And they're crystal clear such that they're comfortable. And obviously they want to move forward and still work with us. That's it. So these primary questions that I rolled through as the next thing, what do you want to keep your maximum house payment to and total cash for closing are key on the initial starting and seeking for programs. It gives us a starting place. Am I going to need the credit? Yeah. I'm going to need to get the income verified. Yes. The down payment and cash for close. Yes. But at least it gives me a starting place to say, this is what they're comfortable with. And if it turns out maybe they got, as an example, $100,000 in liquid assets, and maybe they only want to spend about 50 for closing, but yet it took 60 to 65 or 70 to get to where they want to go, then they're going to have to make that decision. Is the house, is this the one for you? And as a lender, we're going to know if they have the ability to bring that in and close because we've already gathered good information and paperwork. So the complete receipt and review. So when we're going to the extent, everybody wants to get this almighty approval letter, this pre-approval letter. And there are a lot of people in our industry that will issue that in 2 seconds. They'll issue it long before they verified anything. They want to accommodate. They're amiable. I just want everybody to be happy. Here's your letter. Go look for homes. And every buyer that's out there, and I can say almost every single agent, especially if you're new in the industry, you don't want to be confrontational with any client. And you just want to accommodate as best as possible. Let's just get the letter and go out looking. Let's get you excited about something, and then we'll get the paperwork put together. And it just sets yourself up for for catastrophe, because you're constantly in the middle of the transaction discovering more, pitfalls or potential pitfalls, and you're constantly overcoming things through the course of your escrow. It's like patching holes in the dam. It just continues to just leak here and leak there. It's frustrating as heck. So in order to get to a quicker closing, as lenders, we need to not only but we need to review every single bit of all the income documents, all the liquid asset documents for closing, and credit documents would not only be the credit report, but anything, maybe letters deleting items, letters showing that an item is paid off, whatever the case is. Maybe something that's co-signed that proves somebody else makes a payment, whatever. So anything with regards to the credit, the total liquid assets, and all income docs. We run that automated underwriting. As soon as we get that approval, at that point, we're issuing the approval letter such that they can start making offers. Okay. So from the standpoint of the approval letter, once again, you can put the cart before the horse. I use analogies for everything to hit home. And there are very good attorneys in this world. They're going to go into the courtroom in front of a judge and jury that have done a lot of work up front to protect their client and make their case. The term discovery comes into play in the legal arena. That means I've done all my depositions. I've interviewed every single applicable. I have expert witnesses. I am ready to roll. A good loan officer is going to be that person. Whereas the bad attorney is the one that says, we'll go to the courtroom. I'm pretty good talking. I got away with words and people really like me. We'll get in there and we'll figure it out. It shouldn't be a problem. If it comes to a point where I got to bullshit somebody in order to buy a little extra time or gain some favor, I'll do whatever I got to do. So an attorney that's just going to go right into the buzzsaw and walk into the courtroom without any prior investigative work, discovery, depositions, evidence, anything at all, is just an idiot. They're not for long in the industry. And it would hold true with a lot of loan officers. They're not for long in our industry when they don't do their job well. Referrals, you could get 99 deals done beautifully, and you screw one up royally, and chances are you're not going to get the 101st one. In our industry, you're really as good as your last transaction. So if we get everything up front, we got a lot better chance of getting that approval that's going to stick. This little note here says, see the list of items needed and use it as a reference guide on all transactions. I use this with our loan officers. I'm just going to scroll down to the third page here really quickly. But this condition checklist, just a standard checklist, and it's everything. And our loan officers have it in a Word document, so they can amend anything. If there's something that's not applicable for the client, they would delete it. If we don't have the credit report yet, then they delete number 3. If the client doesn't have a bankruptcy, we're going to delete number 4. As soon as we delete a line item, it just goes right back to it's gone, and the numerical sequence just drops right in, no problem. If they filed the 21 and 22 tax returns, we're going to change that. So they're aware of what it is that we're seeking. But this is a catch-all. And if nothing else on the lending side, we're going through here and, hey, check, got it, making sure that we have everything and not downplaying any aspect of the transaction. Something as silly, stupid as the cash for closing, number 12. Like, you get me that later. I mean, I'm sure you have the 100,000 you said you had. Or gift money. We'll just verify that stuff at a later date. I'm sure it'll be fine. So we really need to hold them to the fire with this entire checklist of items that we need in order to make sure that the approval is going to stick. That's really it in a nutshell. So up here where it says, see the list of items needed and use it as a reference guide, that's the list. That's ultimately whatever is applicable for that client. We're going to need that information. And even in putting together, there's items in there on a departing residence. That's the mortgage statement from the previous mortgage loan. If they're going to leave it and they're going to rent it, got to have the mortgage statement. Some people would say, the payments on the credit report, what's the big deal? Because I got to know if that payment includes property taxes and homeowners insurance. If it's not impounded, we got to include that in their qualifying. It just gets back to doing your job well and doing your job not even kind of well, very poorly. That's really it in a nutshell, how important it is to anybody. If any clients and borrowers receive variable income, so they don't get the same income week in, week out, month in, month out, they're not on a base wage or a salary. Our industry requires these written verifications of employment. There are so many people in our industry that soft step that stage, don't want, it's just a bother. And then we got to chase the employer and their payroll or HR. And it's just another thing we got to get. And it's just, people get frustrated. No. The fact of the matter is, I got to do my job well, because if it's important to me, it's going to be important to the people that I'm working with. And if I can explain why it is important, it's going to sit a lot better. If it turns out that I have variable income on a borrower that's not material to the transaction and the other borrowers and income would qualify without them, I'm not chasing paperwork we don't need. That's silly. But if I need this income in order to qualify someone and make sure that the debt ratios are approved eligible through automated, then heck yeah, we're chasing it. And that's before we're even getting an approval letter. That's before they're even showing homes. If there's any changes from the standpoint of our initial pre-approval to the income, the assets, the credit, the property type is changing. We initially ran it for single family, now it's manufactured. We initially ran it for a single family, and now it's a condo. They started in with a 1 unit, and now it's a 3 unit, but it's the perfect one for them. Anything is changing, we got to rerun that automated underwriting. Make sure that our approval still sticks. And some people would say, oh my God, all these, just what there are other competition make it sound so simple. Yeah, the other competition also works on transactions for 90 days and doesn't perform, with everybody wanting to just crucify one another. And families, just people crying and yelling and screaming and cussing and threatening legal action and on and on. Like, what are we doing? So from the standpoint of buttoning it up, that's really what it's all about. And it gets back to, how do we close deals in 15 days or less? This is it. Gets back to, and I started in, that's the secret sauce. Everything in here is the secret sauce that makes everything taste good. Up front, and I would encourage every single person, clients, prospective buyers, they're excited about the prospect of purchasing property. I don't know many, and been doing this for 30 plus years. There's not many people out there that, I guess I could buy a place, but I really don't want to. And no, everybody's like, man, how quickly can we close? We're super excited. It doesn't matter if they're buying a second home, I'm in the beach, golf community up in the mountains, the legacy property, the final retirement home. It's the one for us, the first time home buy, the investors that looking for the good buy on units. They're all excited. They're all, exhibit enthusiasm. They're pumped. So if I can take that sense of excitement and enthusiasm and spin it around to say, I can get this done as quickly, it'll make your head spin how quickly we can get everything done and closed for you. I need to get the necessary documents in order to make it happen. And that's really what it gets back to, that those line item and list. There are people that nickel and dime and piecemeal information into us. Well, here's one pay stub. Can we get the approval letter? No, I need to get everything. We need to verify everything. I need to make sure that we're dialed in and nothing is going to create a problem or throw a wrench in it. So from the standpoint of just getting the necessary documents, once again, as soon as they are sending paperwork to us, we immediately update the list of what we still need. So if I asked for 5 items and you gave me 3 of them, thank you much for the 3. I've reviewed them. They're excellent. I still need these 2. You give me 1 item. Thank you very much. Everything looks great. I still need this 1. Okay. And not at a point where it's like, okay, no problem. Who cares? The utilizing that excitement and enthusiasm and keeping people on a time clock to get the information back in and on a timely fashion is really what it's all about. This is not a fine art. This is not the Michelangelo, Da Vinci. This is anybody that picks up a paintbrush can do this. It's in every one of us to be able to utilize this excitement and enthusiasm to get people to do what we'd otherwise want them to do. I suggested this to all of our loan officers yesterday in a little bit different context, but the fact of the matter is, on this next little paragraph in here, is whether you acknowledge it or not, the people in our industry are interdependent and mutually dependent on one another in order to do their job well to get paid. So there's a lot of hands in the cookie jar in our industry. We got to rely on functions like escrow, title, notaries, appraisers, underwriters, people that draw loan documents, people in compliance that issue disclosures to funders. I mean, you name it. There's dozens of people that have their hand in the cookie jar. The fact of the matter is the loan officer and the real estate agent or real estate broker that's representing the transaction at the end of the day is getting the majority of money in commission. And if I've said it once, I've said it 1,000 times. Act like it. Don't be at a point, well, that's not my job. That's somebody else's job. That's their responsibility. The more that we take ownership throughout the transaction and interact with the other parties to the transaction to ensure everything comes together, smoother it's going to go. It's hands down. You can sit back and wait for somebody else to lift a finger and not follow up on something. And it could be that person, you didn't even realize it, but they didn't even have fingers. You want them to lift a finger, they can't do it. It's not even there. So this notion of best practice to have the agent and loan officer partner up, this relationship and partnership is huge. It goes to encouraging, motivating, exciting, getting everybody pumped to get everything in as quickly as possible for a smooth transaction and timely closing. That's really it. And if everybody's working together, you're going to have success and you're going to get a boatload of referrals. When things happen quickly, everyone's happy. There are people on other sides of transactions. Their head spins. So from the standpoint of referral partners, there are transactions we close so quickly, agents are replying back to us, I can't wait till the next transaction. I can work with you. So do you think it's easy to get offers accepted down the road when you perform well? Heck yeah, no doubt about it. And we're looking for the majority of deals to work in this. Are we going to be 100%, perfect? No. But the reality of things is, with effort, we can get the overwhelming majority of deals to drop in and close in a very timely fashion. This note in here, if the process above is completed well, at the end of this pre-approval, when we issue as lenders, issue the approval letter, the only things that we need to get the clear to close, and it's really cut and dry, we need to have an acceptable residential purchase agreement. What the heck is acceptable RPA? It means that it examples. The agencies have a certain maximum amount of seller paid closing costs. Concessions, depending upon the transaction, non-owner occupied is max 2%. If you're above a 90% loan to value, I think conventional loan, it's 3%. 75 to 90, it's 6%. Less than 75%, it's 9%. It's got to be within the guidelines of the program they're seeking. So if the concessions are excessive, that might not be an acceptable RPA for the program they're looking at. You can't throw personal property in there and say, well, buy my $1 million home, but I'm going to give you a fleet of these 8 exotic cars into the purchase price. Our industry is only interested in, the residential real estate. The acceptable appraisal. What the heck's an acceptable appraisal? As is for starters, if the appraisal is subject to any repairs or other inspections that need to be done. I'm not saying that we couldn't get them corrected, but it's gonna need to be resolved. So if it's subject to roof certification because there's water stains in the ceiling, then we need to get a roofing contractor out there as soon as possible. If there's evidence of infestation and they call out for a pest inspection and clearance, gonna need it. I don't see them hardly ever anymore, but every now and again you'll get people that their smoke detectors aren't working well and they just pull them right out of the ceiling and you just got the cords dangling out of the ceiling. Gonna need to put those back in, and they're gonna come out and do a final inspection and make sure that they're there and in place. Got to have smoke detectors, got to have the carbon monoxide detector, got to have the stinking double strapped water heater. So the appraisal needs to be acceptable. If the appraisal comes in short, of the purchase price. The mortgage industry and lending is always the lesser of purchase price or appraised values, what the loan is based on. So just because the appraisal comes in short doesn't mean the buyer still can't buy the property. They just need to bring in that difference in cash of the appraised value up to the purchase price needs to come in out of pocket as additional cash for closing. So this acceptable appraisal, that's only if we don't get that property inspection waiver, which is the appraisal waiver. So there are some people on conventional loans don't even need an appraisal. So if they're not being called out for the appraisal, scratch this item altogether. Don't even need it. Okay? The acceptable title. What the heck is acceptable title? They're going to need to have clear chain of title. Might sound like, overwhelmingly simplistic, but heck yeah, you're going to need to make sure all liens are all paid, everything's good, no issues there, and we're definitely in a purchase market, no doubt about that. But acceptable homeowners insurance, HOI, is homeowners insurance. I encourage every one of our loan officers and every client we do business with to start shopping as soon as your offer is being accepted. Start shopping for homeowners insurance. Get some quotes. In our loan processing division, we'll offer quotes back if we're processing the loan here and say, hey, use this to compare against anything else you're being offered. But at least it's a starting place. Too many clients out there, especially if you're in a 45 or 60 day escrow, feel that, yeah, man, we got 45 days. What's the big deal? I'll start looking for insurance on like the 39th or 41st day. We should be fine. You set yourself up for failure. We've had a lot of fires in Southern California. There's been a lot of damage in certain areas. You want to buy a place that's up in the mountains? I mean, there's a lot of flood damage that even just happened with the Hurricane Hillary last weekend. So you're buying that little place up in the Oak Glen area, whatever, you're probably going to have some issues with insurance in that area. You're buying in fire-ravaged areas, might be at the base of the foothills, or there was a lot of fires out in Hemet here in last year. There might be issues. We might need to get the California Fair Plan involved for supplementary supplemental insurance. So not to downplay the homeowners insurance quotes, because we also need what's called the replacement cost estimator. So the insurance agent or agency, there's a little bit of paperwork they need to come back, and we need to make sure that the coverage is sufficient for the loan. And it's not like, well, I really only want to pay like $300 a year for the insurance. If it's not sufficient coverage for what you're seeking, you're going to need to get sufficient coverage. It's not like, well, I want it to be this way and not that way. It's not to the buyer's discretion. It's the lender's discretion to make sure that they have sufficient coverage. So if we do everything up here right, if the only things we need when we open escrow in order to get the clear to close are CTC, and that's what everybody's looking for, the almighty CTC. We only need the acceptable RPA, acceptable appraisal, acceptable title, and HOI. 4 items. So can it be done in 10 to 15 days? Hell yeah. So I put in here, with that said, when escrow opens, all we should be needing is just these 4 things. Everything else should be buttoned up. I coach everybody when it comes down to rolling over calendar months to get that next bank statement in. If we went under contract now for a 30-day escrow closing towards the end of September, that's wonderful. I'm going to have their June and July bank statements. But what's going to happen in the middle of their escrow? You're going to get August too. The underwriter's going to be asking for them. As soon as you get the August bank statement, please send it to me. I encourage people, every pay stub that you get after the ones I collect for underwriting, just fire me every pay stub you get until we close. I have them. If I need them, bam. So these 4 items, that's it. How to close in 10 to 15. Man, life gets so easy. And when we get approvals that come back, we had one of our loan officers that came running into me the other day, and she's had some transactions that were very challenging. It's very challenging also when maybe escrow or a lender is unable to perform, the buyer's under contract, and the agent brings us the deal 2 to 3 weeks in, and we're trying to close in 30 days. This is tough to close in 10 to 15 days when my first contact with the client is on day 20 of their escrow, and they want to close in 10 days. Not easy. So at points in time, I mean, it is what it is. You deal with the good, you deal with the bad. But we had an agent that came up to me Monday of this week, and had that had printed out the copy of the approval and was shaking, just like, oh my God, look at this, look at this. And I said, my gosh, what happened? The only prior to loan document condition on the approval was the appraisal. Every other item that they needed is in there. So, and the appraisal was already ordered. So as soon as we had the loan estimate docu-signed or e-signed, we immediately ordered the appraisal. So, I mean, I asked her point blank, do you already order the appraisal? And she goes, yeah, in fact, the inspection's being done tomorrow. Wonderful. So you talk about just, really, really getting all your ducks in a row and at a point where things are coming together quickly. What a nice problem to have. You just feel so, just at ease. Certainly our intent, just like anybody else's as lenders, is to close each and every transaction with the least amount of stress and anxiety on all the parties, close escrow on or before the expected date per the RPA. At the end of the day, if we can close early, great. If the parties agree to it, wonderful. If they want to close on the expected date of closing, wonderful. But what is wonderful for us on the lending side is every single thing's in, everything's signed off, and the day that the parties of the transaction want to close, we just execute the wire, send the money, send the deed and the recording documents down for recording, done, recorded, funded. And not scrambling, not running around chasing escrow, running to the bank and getting, additional documents or paperwork and the like. So from the standpoint of piecing that together, if we can get all of our ducks in a row and get everything done up front, life is infinitely easier. I put my contact information in here as I do. Let's see if we got anything in the almighty chat here. Yeah, sorry about the sound up front, people. So let's talk about, Valerie, great question in the chat box. Let's talk about contingency removals. Okay. So excellent. Great subject matter because everybody wants to remove the contingencies, as quickly as we possibly can. In my heart of hearts, when can you remove the appraisal contingency? If I get a property inspection waiver up front, which means an appraisal waiver, I can waive the appraisal contingency right away because it's not a condition of the loan. Don't even need it. We have one of our agents out of Oceanside that's purchasing a property right now. She got the property inspection waiver. Initially, they thought, hey, maybe we want to get the appraisal done anyway, just to make sure we're getting a good deal. And we would feel more comfortable. Didn't want to waive the loan contingency. And then turns out another model match closed, higher than the one that they're looking at in the exact same census tract and housing tract. And then they decided, hey, let's call off the appraisal. No problem. So if you don't have the appraisal contingency, don't have the waiver, you can waive the appraisal contingency once the appraisal's in. It comes in at value and it's as is. So once we get that and it, then you want to waive the appraisal contingency. Everything's good. There's nothing else that needs to be done. Okay. From the loan contingency, I try to get everybody to hang out on the loan contingency and not do the contingency removal. No CR until we get the CTC, clear to close. I would try to hang in there as long as we possibly can. It's going to protect the buyer's money. And in that pretense, like until you have the clear to close, once you have the clear to close, you're in line for loan documents. Everything's met. Every condition of the file is met. No problem. There's nothing that's going to prevent you from closing and funding. So loan contingency would be the last ditch effort. If you get to a point where, let's say there was a delay, there was an unforeseen situation. We had a delay in the transaction. We've had transactions here recently where sellers are in the Far East and they're trying to negotiate documents and trying to get things notarized. And the seller's been the one that's delayed transactions. The buyer's at a point right now where they're at their wit's end, and the buyer's paying for these rate lock extensions, but it's not their fault. The seller's unwilling to lift a finger. Now it comes down to the buyer's either willing to pay it or cancel the transaction and get your money back. So it's sometimes the door swings both ways, but on the loan contingency, I would always try to hang in there until you get clear to close before you waive that. And if we don't have clear to close, then on every single one of them, and there was an agent, I was on the phone with our loan officer and a listing agent end of last week, nighttime, and usually end of the week. It was a Friday evening. Tensions are high. You're going into the weekend, and people want to basically choke each other out. I just want to like throat punch you. They're so upset. And at the end of the day, they're asking, are we going to waive the contingency? And I just chimed in. It's like, that's not even my money. It's not even my decision. The buyer is aware of what we need to get done in the transaction. The loan officer is aware. If the buyer is willing to say, hey, I can get these items that you need, and I'm comfortable knowing exactly what you need, and I know that I'm jeopardizing or compromising my earnest money deposit, and I'm willing to say, hey, I know I'm a big boy, big girl, whatever the case is. I know what I'm up against, and I want to remove it. I got no problem with it. It's not even my decision. So when it comes down to that, and up front, the ones that get the appraisal waiver, it's only on conventional through automated underwriting, and it's going to be those that are overly qualified. So it's going to be lots of down payment, high credit scores, good debt ratios. Those are the ones that get the property inspection waiver, and you'll never get it on an FHA. You'll never get it on a VA. You'll never get it on USDA. It's only on the conventional through DU or LPA, and it's going to be on the borrowers that are overly qualified. And we're going to know if you get an appraisal waiver up front. Before I give you the approval letter, you're already going to know if you have a waiver. So I had gotten a call, as just a funny aside, from Karen Myatt, does a lot of business. And she had a listing that was a probate sale. It was out in San Jacinto or Hemet, and the house was really beat up. And she says, man, would this qualify for any financing? And I said, the only loans that are out there that would do it would be the renovation loans. They're offered through Fannie Mae. The FHA 203K will give you money for home improvement and fixer-upper. Or if you get somebody that comes in on a conventional loan that gets the appraisal waiver, at the end of the day, the lender's never going to know how beat up the house is. They're never going to see all the dry rot. They're never going to see just like, and she showed me some pictures of the house. It was really, and even in that conversation, she's like, oh, okay. Well, at least I know where I stand, of anybody that's coming in here. And she was really trying to protect the family's best interest to get as much as she could from the sale of the home. So she's doing her job, and hey, at least I have some options. I know where we stand, rather than deal, because most cash buyers want to get the deal. They want to pay less than fair market value. Hey, cash is king. I'm paying cash. I'm not paying fair market value. You could get somebody to pay fair market value, or maybe even a little over, if they were coming in with those loans that would offer money to fix the property up. So there's always that quote unquote 100 ways to kill a cat, and I like cats. So anyway,
Question.
Yes.
Regarding the HOAs and like the money they have to have in reserves, is there like a flat percentage that they have to have? Because that could stop a loan, right? If there's not enough money in reserves, or no?
So excellent question, Patty. The only loans out there that have reserve requirements, when you get into jumbo loans, so they exceed the conforming or the high balance loan limits. So LA County right now is 1,089,300 for a single family. You want to do like a 1.1, $1.2 million loan, they might have a reserve requirement depending upon what your down payment is. So on jumbos, that's in there. And then there's some programs for the least amount of down payment if it's an investment or rental property. But none of these other programs, FHA, no reserve requirement. VA, no reserve requirement. Standard conventional, no reserve requirement. So what happens is we take the information on the application, we verified their income, we verified the assets, we have the credit run, it all goes into the automated underwriting, and they know in automated exactly what the borrower has in money, and then money also post closing based on what we put in the system. So it's already approving it with whatever it is that you have, we're good to go.
Wow, that's great. Thank you.
So the twist is, and I mentioned on that when I shared the screen, is if anything changes from the original automated underwriting, and one of the things in there was property type. So we have clients out there that are looking in an area, and maybe like the affordable housing maybe isn't the single family residence in that area. Maybe, hey, all I can afford is a condo. It is what it is. Now, hey, okay, that's no problem, but let's rerun it as a condo, and then what's the HOA that we're looking at? Because that might affect, but your income in relation to debt. So as things are changing, and that's why it really is important that, if you're working with a lender with us or anywhere else, and then for lenders to be working with real estate agents, that we're communicating well and we understand like, hey, this is what we already have. This is kind of the proverbial lump of clay. If anything's changing from this, just let me know and I'm happy to rerun the numbers. You know, if they're very well qualified, I don't anticipate it to be a problem at all. But if we're already right up to our eyeballs with the maximum debt in relation to income, I'd be the first to say, you know, hey, that could affect you. Yeah, there are buyers that came in. I was working with one of the loan officers this morning that had they're looking at single family residence, and the HOA is $343 a month, and they want to keep the payment to $3,500. They have 30% down payment for gift, so that's a good chunk of change.
Wow.
And I mentioned, okay, well, here's where you are for the 560 price. If you go away from the HOA, you can buy a house for 600 grand. So you get 40 extra $1,000 in price in that example with no HOA. And that example was run 3 hours ago. So sometimes even the HOA dictates, you know, like your purchasing power and what you can get with regards to payment.
Yeah.
You know, and it's not like, you know, we make the rules. It's just, you know, hey, this is the dream that, you know, what you're seeking. And this is, you know, how it matters, you know, on the lending side and what, you know, from a payment standpoint, rates are not going to be this high forever also. So, I mean that, you know, anybody that's buying right now, the fact of the matter, within the next year, you know, maybe 6 months to a year, chances are they're all going to be refinancing and taking advantage of lower rates. There's an overwhelming expectation next year in an election year that rates are going to come down quite a bit, maybe a full point or more.
Great. Thank you so much.
You bet. You bet. Any other questions or comments? It's rare that I'm done on time. Awesome. All right. I appreciate you guys chiming in. You got my contact information. You can call me anytime if I can help you out, put anything together, motivate anybody. Appreciate you.
Thanks,
Thanks,
you.
You bet.
Thank you, Greg. Really good
Thank you, Greg.
information.
Absolutely.
Thank you.
You bet. You bet.